Hi all, this is Steve Miley for FX Explained, and we're now going to look at the drawing of a trend line. When we see it on the infographics, when we see it on the textbooks, it all looks very clean and all looks very easy and nice and pretty. Draw your trend line, buy on an uptrend line, and then sell on a downtrend line, and when it reverses that trend line, the trend is over. In reality, as we know, that is far from the case, and markets don't treat us as kindly. So let's have a look at drawing a trend line here. I'm going to look at this New Zealand dollar chart. It's a 4-hour New Zealand dollar chart going back to here, the end of July through August into September. Then we'll look at then the continuation on into October. So initially, when we draw the trend line here, I would be inclined to draw the trend line off the important lows in here. So the important swing lows, I would argue here and initially here. Okay, and the market respects that trend line. You can see here impulsively moving away from the trend line at this point here. It doesn't have to have that third touch. That impulsive move away from the trend line at this point here, which I highlight here, is enough to signal then a respect for the trend line. Then the market again moves impulsively away at this point. We again get a slight piercing of the trend line here, and then the market again respecting the trend line, moving away from the trend line, again pushing to new recovery highs. Eventually, when we do get the break here on this breakdown that we saw in the late part of August, this acceleration lower, the market emphatically breaks the trend line and then stays below that trend line. At that point, the trend line is reversed, okay? But then subsequently what we see is the market then respects these lows, then goes on to make new recovery highs. So although this trend line was then made redundant, we can then redraw the trend line across onto here. So I'm going to redraw the trend line across onto here, taking this off. And then as you withdraw the trend line here, you see the trend line then on this new low, respecting again the market moving away from the trend line at this point here, making those new recovery highs. We then go back to the trend line. At this point, you'll be looking to buy again at the trend line. The market holds on the first challenge, rebounds higher, and then again an emphatic break, a forceful break, impulsive candlesticks in here down through the trend line, signaling a reversal. Okay, and then the market then, as we then wind forward, so we squeeze the chart up a little bit here, and as we move forward with the trend line, you can see the market then uses the back end of that trend line, the underside of that trend line. We get what's called the return move. The market then retesting the bottom of the trend line. That trend line almost now becoming a type of resistance, not perfect resistance, but nevertheless the market is unable to recapture and push back above the old trend line. And then eventually what happens as we move through September now into October, this trend line reversal then finishes off with then the market then moving into its own new downtrend. This has been Steve Miley for FX Explained, and we've been looking at how to draw and how to use a trend line there, and I'm going to wish you a great trading day.